There is N. Chandra talking at the TCS's AGM. Sandip Agarwal, fund manager at Sowilo Investment Managers, is with us. Sandip, what stood out to you as an investor that coming from from TCS? What's your sense? One, of course, I mean, I thought, well, here's Chandra himself, in a way, talking. But he's the chairman and he does this, but there's more attention now because of the situation that Indian IT services finds itself in with the face of all this AI onslaught. But what did you make of it, Sandeep?
Yeah, hi, good morning, Prashant. Thanks for having me in the show. So, I 100% believe what Chandra has said, and not because, he's the chairman and I have to go by what he's saying. As a past analyst and now fund manager, I may have different view, but still I will say that I 100% agree with what he's saying. See, this value chain is very simple, that, it starts with hardware where you have hockey stick growth, which you saw in NVIDIA and AMD and similar others, and then followed by, the providers of those technology like the Microsoft and the Grok and all of them, and they will grow for longer at a better growth rate, and then will come the service provider, which we are there, and that will start now in 1 or 2 quarter time. So I believe that 2-3 years, the 0% growth broadly for the large cap which was there, that will change to 6-7% growth, and with that some rupee benefit. So I have done some maths on Excel, and if you see that maths, from here, if the currency doesn't fall below 92-93, it remains above 92-93, then the EPS growth for most of the companies will be between 35-40% to 70% over next 3 years. So even if you keep the multiple same, I think that is the upside which you will get in this stock. They are slightly better than utility stock, and this is an industry which will be lower growth for longer, but that doesn't mean it is a zero growth and completely written off. Remember the efficiency which AI brings. Because of that, the growth has been lowered by 30%. So a 10% growth industry has become 6-7% growth, but 6-7% growth, I don't have doubts, will continue.
All right. What about pockets which may grow faster, and which are the direct beneficiaries of the AI trade in India, if at all?
So, Mangalam, it's a very good question. So there are two kinds of beneficiary. One are the direct, IT players. So what has happened because of AI and the urgency of it to be deployed, so whoever has the manpower and resources, they will be first one to, get the business. So because of that, there is a massive democratization between the players. So we saw first leg of democratization due to digital, and now second leg of democratization due to AI is happening. So the small and mid cap player within the IT services segment will do better. We are still very cautious and are not looking at opportunity in the ER&D space, because I think there is a lot of disruption there to happen, and the stocks have not corrected meaningfully the way services stock have corrected. So that is the first layer of impact. Second, I think all these data center, quasi data center players, the hardware distributors, the line providers, the pipe providers, and also the coolant pipe providers, I would say. So stainless steel companies which makes pipes which can provide pass through the coolants and all, those will be the second type of beneficiary. So I believe there is a lot of benefit which will happen to Indian IT companies, but don't compare our benefits to the likes of the Mag 7 or even the the hardware providers. I believe hardware providers in last leg, maybe 12-18 months more, there will be good growth, but then you will see 15-20 years of lull again there. The way we saw after 2002, it has taken 22 years for another hardware cycle to come. So I am not positive on the hardware players. I am positive on the providers like the Mag 7, and then followed by Indian IT services and ancillary.
All right. You mentioned briefly about stainless steel, the pipe makers, right? If I heard that correct. Which
so
one?
Because
the one that y'all have been investing for a while, Venus.
We have not invested public in our PMS in that.
I think you personally maybe had some investment.
Personally, but I would not recommend only one name or anything. I will say any stainless steel provider, pipe provider will benefit, because there will be a lot of demand. There is a 2-3% requirement of the total capex in data center of stainless steel pipe. So any pipe provider will also do well in the long term, because you have to finally keep the GPUs cool and the centers cool. So you will need the coolants to pass through.
Okay, got it. So that could be another ancillary play, that discussion for another time. But this ER&D, that theme was very hot. I recall, 5-6 years ago when we chatted as well, that was very hot. Now those stocks, some of them are less than half of what they were at the peak. But you're still not interested over there? Valuations are still too expensive and growth not going to keep pace?
So growth will keep pace, Nigel. So the thesis that they will grow at the double the pace of IT services remains true, but they were at 5 times the multiple also. So multiples even after correcting 50% are still away from comfort level. I believe ER&D companies will still correct 20-30% at least from here before they become a buy case. But IT services, I believe, barring one or two, are all ripe for giving good return. As I gave you the example, EPS growth of 45 to 70% in next 3 years minimum you will get in this companies. Now, based on that, even if multiples remain same, you will make that kind of return. That is what my thesis is.
So
and we are heavily invested in IT services right now.
40 to 50% returns could be probable in IT services names in the next 3 years. Would that be your call?
Yes, minimum that much I'm expecting.
And what would you go for, the traditional big names, the nifty IT stocks? Or would you go for the Persistence, Coforge, those stocks which are actually growing at a faster pace between the two?
No, we will have a mix of portfolio. We will have some of the large caps because we like 6-7% growth, and the as I said, EPS growth still will be 40%. So I will go for them also, and I will mix them with the smaller IT services company which are trading at 8, 9, 10 times with 30-40% cash balance. I don't see any risk in them. Return may come after 6 months, but that is where we have to take the risk and we have to have patience to make return. So we will stay with that.
All right. I wonder whether you have a view on Reliance or not. But before that, we'll go across to our colleague Rachna, and then we'll ask you about your view as well. Reliance Industries and Meta Platforms have announced a significant expansion of their strategic partnership with an agreement for an AI-enabled data center in India. Rachna, take it away.
Well, Meta and Reliance Industries have announced an agreement to build an AI-enabled data center in Jamnagar, Gujarat. Now, the facility will have a capacity of 168 megawatts in its first phase with options to scale. Reliance will construct it, Meta leases it, runs entirely on renewable energy and will cool these data centers using desalinated water. Now, any conversation around data center has been about the water it utilizes as well. So, an important one to note that it would be desalinated water, and Meta will cover the full cost of energy and water supporting. Now, the facility in Jamnagar, where Reliance is already developing one of the largest data center campuses in the world, paired with Meta's project Waterworth, the longest subsea cable system ever laid, this puts significant compute capacity on Indian soil, connected directly to the global internet backbone, potentially for now. For Meta's India users, and there are over 1 billion of them, or us across WhatsApp, Instagram, and Facebook, this could mean AI being served from local infrastructure. So lower latency, faster performance. For Reliance, though, it is the next step in a partnership that has moved through each layer of the digital stack. It's the third time around they're partnering. The first was the $5.7 investment in Jio in 2020, then the Llama AI joint venture, and now it's physical infrastructure. On clean energy, Meta has contracted nearly 1 gigawatt of new solar and wind capacity across 5 states, 837 megawatts with CleanMax and 88 with Fourth Partner Energy. All in all, this partnership could indicate that India is moving from spectator to stakeholder in this global AI race.
All right, thanks very much, Rachna, for that. By the way, CleanMax is up 10% as we speak. Reliance, of course, is opening up higher as well, 9%, 10%. Yeah, there you go. 1350 dropped off a little bit from the highs, and Reliance, of course, is up about 0.5% as well. Sandip, any thoughts on this, the development?
No, so it is a must needed, as we know that land and water and coolant, these 3 things will be required for the data centers. We would have been more happy, if Reliance and Bharti, who control the customers, they could have run some AI deal which would have have higher proportion for India. But unfortunately, because of the hurry to have some AI ahead of others, we have to go with it. But broadly, these are the ancillary benefit and not the main benefit which should have happened.
All right. Thank you very much, Sandip, for that. There's 4 minutes to go for